Welcome to this explainer. Today we're diving into a massive structural shift that is happening right now in the healthcare sector. If you've been paying any attention in the markets lately, you'll know the insurance industry is notoriously rigid. It's traditionally been dominated by these legacy giants who basically rely on sheer scale to win. But there's a serious fracture in that foundation, and a totally new breed of company is rising to the top. We're essentially looking at a fundamental reordering of how health coverage is sold, managed, and consumed.
All right, let's jump straight into this by looking at an incredible anomaly in the market, a 30.9% year-over-year growth metric. Now, in the mature, heavily regulated world of insurance, seeing growth numbers north of 30% is a massive, flashing signal that something extraordinary is happening. It's not a rounding error, it's not some minor seasonal bump. This surge actually represents a huge reallocation of capital and, more importantly, consumer trust towards specialized care.
So you've got to wonder, why is this one specific slice of the market absolutely exploding right now? To really understand the catalyst behind this surge, we have to look past those surface-level numbers. We need to look closely at the fundamental business models that are actively competing for your healthcare dollars and see exactly how agility is starting to completely outmaneuver sheer size.
Section 1. Standalone versus diversified insurers.
Okay, first things first, let's get a clear definition to ground our investigation. A standalone health insurer, or a SAHI for short, is exactly what it sounds like on the tin. It's a specialized company with an absolute, uncompromising focus on health coverage. Unlike legacy insurers that might try to, bundle your health plan with your car or your house, a SAHI does one thing and one thing only. They eat, sleep, and breathe health insurance, totally avoiding all other general insurance types.
It really is a classic matchup of agility versus scale. On one hand, you have the standalone health insurers. These are your agile specialists with a laser focus on health. Because they aren't bogged down by a dozen other corporate divisions, they can often process claims way faster and build much better, highly specialized networks. On the flip side, you have the diversified players. These are the massive generalists, the legacy companies offering health, auto, home, and pet insurance, all under one gigantic corporate umbrella.
Let's move on to Section 2, the YES Securities Forecast.
When we look at the recent forecast data from YES Securities, the reality of this matchup is just stark. The specialized providers aren't just slightly edging out the massive legacy companies. They are quite literally leaving them in the dust with that 30.9% year-over-year growth. The generalists simply cannot match the upward trajectory of these highly focused health specialists. It's hard proof that having dedicated resources leads directly to superior market performance.
And here's the real kicker from the analysts at YES Securities. This isn't just some temporary flash in the pan. This specialized dominance is a structural shift, and it's forecasted to continue. They explicitly state that standalone health insurers are likely to remain ahead of diversified players. So the market is fundamentally rewiring itself. The momentum is locked in, and the specialized players have secured a durable long-term advantage over their generalized competitors.
Which brings us to Section 3, why this matters to you.
Look, these massive industry shifts, they don't happen in a vacuum. The immediate question you should absolutely be asking yourself right now is how this victory for specialized insurers impacts your own coverage options. If the companies focusing purely on health are the ones winning the market, how is that translating into the actual policies, the premiums, and the protections available to you as a consumer?
Well, what we're seeing is that everyday people buying insurance are heavily favoring specialization right now. Consumers themselves are actively driving the success of these standalone models, representing a fundamental shift toward dedicated health products. And it totally makes sense when you think about it. When it comes to something as vital as your personal health care, you want an expert. You wouldn't go to your auto mechanic for open-heart surgery, right? So why use a health insurer who is simultaneously trying to underwrite car accidents and property damage?
Ultimately, the YES Securities data points us to one undeniable conclusion. Extreme focus is just crushing massive scale right now. The old playbook of being the biggest, most diversified conglomerate in the room, it's really losing its effectiveness. In today's incredibly complex healthcare landscape, being absolutely fantastic at one specific thing, health insurance, is vastly outperforming the old strategy of being just okay at a dozen different things. So I'll leave you with this final, provocative thought to chew on the next time you're evaluating your own insurance provider. As these hyper-focused specialists continue to completely take over the market with massive growth rates, are the jack-of-all-trades insurers, the ones bundling your home, your auto, and your health, eventually going to become a thing of the past? It's a fascinating shift to watch unfold.
Thank you so much for joining me for this explainer, and definitely keep this in mind the next time you're looking at your health coverage.